rate decision, President Trump has not been shy to provide his views on what the Fed should do, tweeting just yesterday that the Fed should be careful not to make, quote, another mistake, this time warning about further reductions in the balance sheet, after earlier saying continued rate increases would be wrong. Welcome now from Capitol Hill, a member of the Senate Finance and Banking Committees, Republican Senator Pat Toomey of Pennsylvania. Thank you very much for joining us, and thank you for your patience, sir. It's good to have you with us.
Good morning. Thanks for having me.
So let's start right there, because the Fed is very much in the minds of all of our viewers right now, coming up this afternoon. What do you make of the president's statements, repeated statements about the Fed, on two levels? One, is he right on the merits? And number two, is he right to be really addressing the merits?
Well, first of all, let me say this. I think the path to normalization, the process of normalizing interest rates, should have begun in 2010. Is wildly overdue, and we engaged in a very dangerous, extraordinary monetary policy for many years after we were already out of the crisis. So I am grateful that Chairman Powell and his colleagues on the FOMC have been pursuing a path to normalization between balance sheet reduction and modest increases in the Fed funds rate. We're certainly a lot closer to normal now than we were a couple of years ago. I think that's a very good thing. The president has his views on this, and as we know, the president is not shy about sharing his views. I think the important thing for Chairman Powell and the FOMC is ignore the politics, ignore the noise, do what the data suggests you ought to do. I think actually it's a close call as to whether they should go up a quarter point now or stay, have a pause. Probably the argument for a pause seems a little stronger to me, but they've got a great deal of expertise that I don't have. I think either way, we can get through this. In other words, if they raise rates today, as it looks more likely than not, then that suggests maybe a little bit less next year, or vice versa. But either way, we're certainly much closer to a neutral rate, and that's where we should be heading.
We heard actually from Secretary Mnuchin yesterday about some of the turmoil in the markets and what caused it. He said it was things like high-frequency trading and the Volcker rule. What do you make of it? Because you are very much in the center of economic policy. What do you make of what's going on right now in the stock market, and for that matter, oil as well?
So, look, I think we have to acknowledge, right, the stated purpose of the Fed's extraordinary monetary policy of zero interest rates, negative real rates, massive balance sheet, the stated purpose of that was to inflate asset prices. Well, they accomplished that. You have to expect that normalization, the withdrawing of that extraordinary liquidity, is going to contribute at least somewhat to taking some wind out of some sails. So I think this normalization process inevitably meant some assets are going to reprice, and so there is some of that. But I also think that Secretary Mnuchin is right. The Volcker rule, for instance, clearly diminishes liquidity in the financial markets. It takes big trading players out of the market, and so we should expect more volatile swings, and that's exactly what we've seen.
Senator Toomey, you're in a particularly positioned to roll back or ease some of these requirements on banks. We know that there have been efforts to do so. Do you expect further efforts to reduce regulations like the Volcker rule on big financial institutions?
Well, look, I think it's important to remember we've not only massively increased regulation, but we've also massively increased capitalization. I think the American banking system has never been as heavily capitalized as it is today, and it's never been as subject to as prescriptive a regulatory regime as it has today. Both of those don't make a lot of sense to me. The purpose of the capital is to weather a storm, and it diminishes the need for the incredibly prescriptive regulatory environment that we've been in. Having said all that, it takes 60 votes in the Senate to pass most any legislation, and certainly a change in the regulatory regime, and our Democratic colleagues have not agreed with the notion that we might want to allow a little bit more flexibility on the part of some of our financial institutions. So I've got a list of things I would like to do, modifying the Volcker rules among them, but honestly, legislative prospects, especially with Democrat control of the House, are not great.
Senator, do you think that the declines and the underperformance that we've seen in financial equities recently has been in part because they have been hamstrung from taking risk?
I think it's hard to say, and I'll leave it to others to parse through why a particular sector has underperformed the rest of the market. I'm aware of the financial sector's performance, but I think there are a number of factors there. But I think it is unambiguously true that we've dramatically increased capital requirements, and we've dramatically curbed their ability to innovate and their flexibility. So that would suggest, all else being equal, a little pressure on equities.
I want to just visit briefly with you, Senator, one thing that we talked about you before. That's the USMCA, the successor to NAFTA. You had hoped that that was going to get through in the lame duck, as it's called, to Congress. Didn't make it. Isn't up on the agenda. How concerned should our viewers be about getting this deal ratified? Because we thought we were past that hurdle.
Yeah, so let me be clear. What I was advocating for was some modifications in the implementing legislation, not reopening the negotiations, but moving some of our positions in the implementing legislation in a more freer trade direction, because I think this modified NAFTA curbs trading. It diminishes free trade throughout the continent. So I think that's a net negative. The administration chose not to pursue that path. The president decided not to negotiate with those of us who are really strong believers in free trade. Instead, he is now at the mercy of Nancy Pelosi. Speaker Pelosi has been in this position before. We have seen this movie before, where a Republican president passes on to Speaker Pelosi free trade agreements, and what did we see? Each time, she refused to act on it. So I'm not extremely optimistic that we're going to see any movement anytime soon. And if we do, I'm afraid the demands are going to be to take it in a further protectionist direction, not in the direction of greater economic freedom.
Senator, I'm just wondering, we are awaiting a Fed decision later today, and I'm wondering, do you think that if the Fed decides to continue hiking rates, that senators will band together to provide some more fiscal stimulus?
I hope not. I don't think that's necessary. I think you can make a reasonable case for why another quarter point's not a bad call. I mean, after all, our growth is still over 3%. Inflation is about 2%. We do have some tightening from the form of a reduced balance sheet, and so that is a little bit of headwind. But still, our real overnight rate is close to zero. So that's not extraordinarily tight. Short-term Treasury yields are above the Fed funds rate, so that suggests that it's not extremely tight. So I don't think if the Fed were to take one more modest step towards normalizing, towards reaching a neutral rate, that we ought to respond with some kind of spending blowout. I don't think that'd be a good idea at all.
Okay, Senator, thank you so very much for your time today. Really appreciate it. That is Republican Senator Pat Toomey of Pennsylvania. Always good to have him with us, Lisa.
All right, joining us